Okay. It's Katavas here again. Thank you for your attendance. We continue from where we stopped yesterday regarding audit sampling. Okay. I saw another set of notes, but I think these ones are similar to what you guys have, so I won't change them. I don't know if you're comfortable with these ones. Okay, you can maybe comment to be sure that you're okay with these ones, because I saw some that you guys have the one that is topic 5, the complete thing. Okay, but these ones also, I don't think they're very different from what you have. Yeah, they're the same. The only difference is that the other one is a bigger document. It covers all the other topics of topic 5. Okay, so we start with this example. This is where it stops. Okay, so the example says that you are required to, okay, maybe a recap. Audit sampling, we said in layman, it is choosing items that we're going to audit or look at from a big population that ideally saves cost and time, and the other advantages like giving reasonable assurance rather than absolute assurance that the sample is a preferred mode of selection of items that you're going to audit. Okay, so having said that, we're saying that as auditors, we usually pick a few items, not necessarily a few, but some items out of the population to represent the entire population. So the procedure is that we do what we call sample design, size and selection. Okay, that as you come up with a sample design, you want to be sure that the audit objective is achieved, as you're going to see in this case. And then through achieving the audit objective, you come up with the population. From the population, it's where we come up with a sample unit or sampling unit, which clearly we get to know what is the diversion or the deficiency or the problem or the error. Okay. Then after coming up with the error, then it will lead us into knowing now the sample size. Okay, considering a few things, because for sample size, you don't just come up with it. Okay, we have things like confidence levels, which is usually set either through audit planning. That as you plan, you come up with a confidence level because of what you have assessed during the early stages of the audit. Okay, so when the confidence level is fairly high, 95%, then the assumption is that the risk is actually low. Okay, then tolerance deviation rate is set at 10%. Still, it's an assumption. Other entities may prefer maybe 20%. Other auditors may put it to 5%. Okay, depending on what risk the auditors can really take on or accept. Then you have the expected rate of deviation. Okay, the expected rate, I think, it is always revised like during the audit, depending on what you're seeing as you move on. So, however, if it's set at 0, meaning that there is no deviation in any way, then it will lead us through in coming up with a sample. I'm just giving a brief of this before we look at this very example. Now, all those are under sample design. Then, after coming up with a size, which size is given by a formula. So you will see that at some point you'll have to first find sample size, and which you can also get through identifying the sample interval. As you can see, so that shouldn't be a problem. Then when you come up with a sample size, then you have what we call sample selection. That you have a size of 20, but how do you come up with items that fit in the 20? Okay, so that we shall also look at. And then it leads us to the second stage of sampling, of audit sampling, which is performing audit procedures. These audit procedures usually help us to achieve the audit objective, that as you perform the audit procedures, you're trying to make sure that you either identify the deviations or confirm that actually they're not there. Then after coming up with the performance, of course, you'll get up to know the results. Now, when you get a few results, like we shall see in this example, you evaluate the results. In evaluation of these results, it's based on standard statements. Okay. As I will share shortly, maybe if I may just show you what I shared earlier regarding evaluation. Okay, it's a short thing. Okay, so they'll tell you that if you're performing test of controls, okay, just a moment. I need to, okay, so okay. When you're performing test of controls, as you evaluate your results, the thing is that for test of controls, if you have an expected high deviation rate in the sample, it may result in an increase in the assessed risk of material misstatement, unless further audit evidences shows the contrary. That when somebody performs test of controls on a sample, if you're seeing an unexpectedly high deviation rate in the sample, okay, then we're saying at the end of the day, you're supposed to increase, because at the end of the day, what happens is, if there's high deviation rate, that means the assessed risk will be high, and you need to perform further audit procedures to cover up with evidence. Okay, remember from topic 4 that when somebody performs test of controls and you find that your internal controls are efficient or effective, you may want to consider a combined approach where you have test of controls and substantive tests. But however, where test of controls indicate that the internal controls are weak, then you perform intense substantive tests. Okay, so that is under test of controls. Then for details or substantive tests, what happens is if there's an unexpectedly high misstatement amount in the sample, this may lead the auditor to conclude that the class of transactions or account balance, whatever you're auditing, is materially misstated. And in absence of further audit evidence that no misstatements exist. Okay, this in short means that if you perform a test of controls or substantive tests, and you find that the sample is telling you that there are so many errors, actually far more errors than you expected. Okay, then we're saying generally there's material misstatement in our population at the end of the day. Okay, so that's how we evaluate results, as you're going to be seeing in the examples. Having said that, that was a recap. We can just go back to now what we're doing. Now, the example is that you are required to collect evidence on completeness of invoicing sales during the interim audit of NAMA Enterprise for the period ended 31st December 2021. So if I may stop there, completeness, you all know that when you're trying to check for this, you're trying to come source documents as you tend to the financial statements. So if we're looking at invoicing of sales, so ideally you know that the first thing you should be looking at is goods received note or delivery note, which indicate that you have made a sale, and then we trace those to invoices. Okay, so as you tend upwards, then you're performing completeness. Okay, maybe to start with this side, you have the sales order. Okay, sales order leads you to goods delivery note. Okay, after delivering the goods, then you invoice the customers. That is if it's on credit. Then the invoice will lead you into a sales debit. Okay, where you record all the sales on credit, and then into ledgers, and then into the trial balance. Okay, and then finally into the statement of financial position. All right. So if that's the case, in your mind, you're like, okay, I think I know what procedure I'm going to perform. Then they say that show how you would collect evidence using attributes statistical sampling and non-statistical sampling, assuming the risk of material misstatement has been initially assessed as low. Okay, so what's for sure is under sampling, it has steps or stages that you have the sample design, sample size, and selection coming first. After doing that, after coming up with a sample, supposed to perform audit procedures, and then audit procedures will give you results, but which you have to evaluate as the last step. Okay, so here, as you see, these figures really are not in the case, so use assumptions. So one is the audit objective. Of course, one is already given in the question. They want completeness. So if they want completeness, that should be objective. You want to collect evidence that sales invoices are raised for all goods dispatched. Okay, because if all goods dispatched, we have an invoice for them, then we're saying there's completeness in that regard. Okay, we're turning from goods received not to sales invoices. That's completeness. Then you come up with the population. Now, the population here that was given is of 7,520 goods received notes. Yeah, from this number to this number for a period of 1st January 2021, 30th September 2021. So this shouldn't be surprising because it's an interim audit. So interim audit is usually within the year. Now, if you're saying this, be sure that this figure is saying this 7,520 should really match this sequence here. How do you know that you have over 7,520 goods delivery notes within these numbers? For those who have calculators, if you get 9,006 minus 1,487 plus 1, why you add plus 1 is because even the 9,006 is inclusive. You will get 7,520. Okay, so that's your population. Now from the population, you come up with a sampling unit. Sampling unit usually is that item that you're looking at. So in this case, it's a goods delivery note. On another day, it will be a sales invoice. On another day, it will be maybe a payables list. Okay. On another day, it would be maybe a register. Okay. So in short, sampling unit is that item that you're looking at. Then we have deviations. Now deviations, like I already told you, it is what you're trying to check in your objective. That as I try to look for the audit objective, what is the likely thing that may go amiss or that may go wrong? So in this scenario is when you have a goods delivery note without a sales invoice. Okay, that means that you're not recording everything. However, if there's justifiable reason why the goods delivery note is not having a sales invoice, then it's not a deviation. Okay, some of the reasons why a goods delivery note that are legit, that may not have a sales invoice, may include things like cancellation. Okay, if you canceled the delivery, then through an authorized person or through when it's authorized, then that will be legit. It will be fine. It's not a deviation. Then if I told you matched the difference to the goods returned note, okay, you took goods and they returned the sum. So you will find that the goods delivery note is having fewer items than the sales invoice. Or the sales invoice has more items than, rather fewer than the delivery note. But there's a justification that some goods were returned. Then there's no deviation. The deviation comes when you're saying we delivered 20,000 bags, but the invoice is saying there are 20 only. So that difference, we ask ourselves, what is it? So if it can be justified, then it's not a deviation. But if it can't be justified, then it's a deviation. Why is the unit received note? It's because it's what you're going to be looking at. I've just emphasized that the items you're going to look at is what becomes the sampling unit. Okay, and it came from this side of audit objective, that to collect evidence that all sales invoices are raised for all goods dispatched. Now, the evidence of goods dispatched is a goods dispatched note. That's the evidence. So we need those good budget notes so that we confirm that indeed they occurred and therefore the sales were recorded, isn't it? So let's continue. Now, sample size factors. For sample size, you don't just say out of the blue that I have sample size. As a matter of fact, there's a table here that shows some of these things, these factors. They are here. This one is for internal controls. And there's the one of I'm saying the other one. Okay, but otherwise, there's a table like this one, for example, assessed control risk, but the other one had assessed material misstatement risk. I thought it shows invoices. Okay, let me emphasize something here regarding the sampling unit. What's her name? Sure. Okay, we don't even have a name. Huh? We're saying this is completeness. This is not existence. It's completeness. Now, for completeness of sales invoices is stressed from where they're coming from. That somebody raises a sales invoice when goods are delivered to the customer. So once the goods are delivered to the customer and the customer has signed that they have received the goods, then we issue them an invoice. So for completeness, we're saying all goods delivered are supposed to be invoiced, or we're supposed to issue an invoice for them. So the only way you can test for that completeness is when we come from the goods delivery note as we tend to the sales invoice. That's completeness. If they had said you are required to collect evidence on the existence, yeah, of invoicing sales, of sales invoiced, then to be different. Sales invoice will be now the what? The sampling unit. Okay, but otherwise, yeah, if you look at completeness, we're saying are all sales invoices complete? Are they all here? So you don't say they're all here by starting from where they are. You begin seeing from where they come from. Do they bring everything or they just bring a few of those? Okay, I hope I've cleared that. So I was still talking about this table. Now this table here, it is, they say whenever you have an assessed risk and it's low, then the confidence level will be 95%. Okay, but this one is different. This one is for control. The one of assessed risk says when assessed risk of material misstatement is high, then the confidence level is high, 95%, because you need to curb that risk. And therefore, at zero expected rate of deviation, shall have a 3 as a factor. These figures here, all this table here is given. So it's not for you to cram. This table is always given. So let's continue. Maybe other things to emphasize are these formulas. That sample size is equal to confidence factor, which is this, divided by tolerable rate of deviation, which they normally give you, or they always give you. Okay. There's another formula, by the way, that you'll see.
Katalazi, I have a question. Here in our pamphlet, the high with the confidence level of 95, then the confidence factor of 3. How come yours is opposite?
It's what I've just said, that this question talks about assessed control risk, but yours, I'm sure it's saying assessed risk of material misstatement. They are two different things. Okay, and so I just said it that what you have there is different from this one, because this one is control. I think yours says material misstatement. Am I right?
It says risk deduction required.
assess risk reduction acquired. Yes, so it also says that when you need to reduce the risk so terribly or so seriously, you want to consider a confidentiality level of 95%. Okay, because what happens is with the confidentiality level of 95% or a higher percentage, it means that for any test that you make, or if you're making 100 tests, you're saying 95 of those will always be correct or will give you accurate information. So that means that the risk is going to be high. If your intention is to reduce the risk so seriously or so significantly, then you want to consider having a test that is so confident. You understand? Okay, so I've just explained that, so I hope we are fine with it now. So it depends on the English that I've used in the table. Otherwise, it's supposed to be the same meaning. So let's continue. So I was saying, now for you to come up with a sample size in this regard, by the way, this is systematic, not rather random. So for coming up with a sample size, what we do is you have a confidentiality level of 95%. This 95% is not really our interest. Our interest is the factor, the confidentiality factor, because of the formula that says it is here that minimum sample size is given by confidence factor divided by tolerable deviation rate. Okay, this formula here. Okay, so that is one. Then expected rate of deviation also is important because it helps you to come up with this still with the factor. As you'll see some tables below as we move on it, that where you have a 95% confidence level, but the expected rate of deviation is maybe 1, then the confidence factor will not be a 3, it will be something else. Okay, so so we're okay. Now you come up with a sample size, which is given by the formula, like I'll put it. Confidence factor comes from the table, like I've just shown you here. That if it's at 95, then the factor is 3. If it's at 90, then the factor is 2. At a 0 expected rate of deviation, I want to emphasize this part. 0 expected rate of deviation, that's how we end up having these factors. If it is 1, these factors always change. So let's continue. Where I stopped. So once you divide, of course, you come up with something. So this is how big the sample will be, 30. Okay, from the 3 divided by 0.1, which is the tolerable deviation, the formula, and from the assumption that they made. Okay, that's how we come up with the sample. I hope we're together. Sample size. Now, in a non-statistical sampling, the size may also be set to 30. For non-statistical, it is judgmental. We already talked about types of sampling. There are mainly 2. You have the statistical sampling and the non-statistical sampling. Non-statistical, you use judgment, professional judgment. For statistical, you use probability and random selection. Okay, the common techniques that you know. So having said that, now after coming up with a sample of 30, how do you select? Okay, how do I end up having the 30? Okay, sorry about that. How do I end up having the 30? Okay, so this one is usually either use computer generated figures. This one's always a constant. Eh? Try to keep it of it's really constant whenever you're selecting a sample. You just say maybe select using random numbers, what you call generators. Okay. Or you can choose if it's non-statistical. By the way, here we can use what you call computer assisted audit techniques. Then in non-statistical sampling, we can use haphazard sampling. Haphazard, I already told you, excuse me, it doesn't follow any techniques that are known. Okay, you just come out of the blue, you just tell them, you know what, you give me the first 5, for example, or the first 30 goods received notes in that population. Or the guy will tell you, give me the first and the last the first 15 and the last 15 in that population, just like that. That's what we call haphazard. Okay, it doesn't follow any serious, any organized kind of selection or technique that you know. Okay, then after coming up with a selection of 30, then we now perform audit procedures. On that sample of the 30 now that you have, after selecting them, now officially you have them physically. Okay, you have GRNs with you, 30 of them. What do you do with them? As auditors, you look at each GRN, okay, and perform an audit procedure. So for this one, we know that ideally is supposed to match the goods received note, at least with details from customer to quantity and prices, and you match them to the invoices or specific sales invoices that were issued to customers. If they match, then you're saying you're right, you're kawa, you're good. Okay, so it's what they do. They say that for each GRN selected, the respective sales invoice is inspected and the goods dispatched, and the goods dispatched, okay? And customer names are agreed with those on the goods received note. Okay, I've just talked about it in my own words. Now, then, after doing the procedure, then you tell us the findings. What did you find out? This is findings. You have done that. You have compared the sales note to the GRN, looking out for inspection or inspecting for authorization and these others. What did you find out? And this scenario example, just, of course, these answers, you choose them on your own. Okay, this was an example. It's an open question. You just choose what you think you found. Now here they said all GRNs were found to have been invoiced. Okay, so meaning that each GRN had actually an invoice and they had customers correct. They had everything correct. That's what it means by this point. So if this is what you're finding out from your audit procedures, how do we evaluate the sampling result? How do we evaluate? How do we authenticate? Okay, what you've just told us. That's what they do. That a sample rate of deviation rate is computed, where you will get the deviation that you found in this. Unfortunately, we didn't find any deviation because the guy is saying that all GRNs were found to be invoiced. Okay. Remember, under deviations, when we are trying to design our sample, we said a deviation. This is where a GRN without a sales invoice. So, but these ones all had invoices. So meaning that our deviation is 0, didn't have any deviation, giving us a rate of 0%. Okay. Now it's giving us a 0%, but for us we had to put our deviation or the total rate of deviation at 10%. Remember from our question here, still under design, we made an assumption that tolerable deviation rate is 10%. So when you compare what we found in the sample and what we have, we conclude that since in the sample there's nothing, yet we tolerate 10%, but 30% and less, of course, and it's a 0, then you're doing very well, you're perfect. So we say that the control is effective, and therefore there is no need to consider increasing substantive tests of details on cells. I hope that is okay. Remember, test of controls, we say that if you find that what you're expecting is what is actually happening, meaning that there's no deviation, then there's no need for you to perform other audit procedures. Test of controls will just be enough. Okay. Yeah. So guys, that's how the example is supposed to be done. Let's look at the other mode of sampling, what we call non-statistical. All these guys, they borrow from each other. Okay, that what is constant are the stages of audit sampling. You must come up with a sample, sample design. From the sample design, you come up with a sample size, and then you perform audit. Okay, sample size, then you select. Okay, then you select the sample. And after selecting the sample, you perform audit procedures. After performing procedures, then you evaluate the results. Okay, so let's try out this other example and see. Non-statistical sampling. Okay, this is why I use judgment, like I already told you. You have to perform substantive tests. Now here they are emphasizing substantive tests. Now substantive tests, whenever you find any challenges or any deviations, remember deviations are the deficiencies, or the variances or the errors. Whenever we find deviations using substantive tests, as long as it's material, we ask management to correct their books. Okay, that if you found maybe a sales figure of 20 million missing, wasn't recorded through substantive tests, we tell management to record it. If they refuse, then we are forced to look into our report, okay, our audit report, whereby we are going to change the opinion based on that information. Okay, so it is important that you know that there's a difference between substantive tests and test of controls. Okay, test of controls just guide you on whether to perform more procedures or not. Substantive tests, they are the detailed tests that you perform as auditors. So they're ideally the final. So where the management is playing games, then you're forced to modify the report. But if they comply and say, you're right, we made an error here, and they allow you, or they allow themselves to correct the financials that they're giving you, then you should not modify any report. Okay, I've said too much. You have to perform substantive test of details on the following receivable balances to verify whether they are not materially misstated. Okay, so show how you would perform the tests using non-statistical sampling. Okay, so you have, if you may check these invoices, you have 1, 2, 3, 4, 5, 6, 7, 10, up to 40 customers or datas, and they have different balances, giving us a total of 207,295,000. Okay, so all these customers, you need to look into them, you need to audit. Of course, you can't audit all of them. You can't go and say, you know what, like you write external confirmations to all of these guys, to the 40 people. Okay, you can't do that. So we do sampling. So in doing sampling, we choose a few, but you don't just choose them. You follow a few procedures and then you choose those, and then the ones that you perform audit procedures all together. I hope we are. Okay, so the first step is under sampling, you do what you call a sample design. Okay, where for sample design, you must clearly tell us the audit objective. Okay, so the audit objective is always given in the question. Okay, they told you that you want to verify whether they are not materially misstated, the balances themselves. So therefore, we have to verify whether trade receivables in the statement of financial positions are not misstated. Okay, they shouldn't be either low or over. Having known that, then we come up with the population. Okay, but this time it was given. The case is clear. There are 40. Okay, unlike the previous one, we were just assuming the question for ourselves. Okay, in this case, it was given it is 40. So there are 40 trade receivables totaling to this amount for the period ended 31st December 2021. The year wasn't given, but that case we've assumed, but still it's still fine since it's the end of year balances. Now, the population may be stratified as follows. Okay, stratification is where you group items of similar characteristics together. So when you look out through on these items, you find that some are very big, some are medium, some are what? Are very low in terms of value. So what they did, they had two clusters or two stratas. One is more than 15 million. Okay, and there are only three. If you come and look out for items that are above 15 million, you will see that we have this one here, the 8, it's 44, so it's above 15. We have the one of 20, it is 17 million, so it's above 15. And then we had the one of 30th, which is 27 million. So there were only three. When you add their amounts together, the 27.7 and 17 and then 44, you come up with the 88.9 million. Okay, you can add them there for those who want to prove it, but that is it. Then the other cluster was between 5 million to 15 million. Okay, and there were 10. If you come to look out for those, which I will do for less than 5, I want to do. Okay, because it's just a balancing figure. But when you add this plus this, it must give you 40. So 27 is just a balancing figure to make the 40. So let's go to 5 and 15 and count and see if you can come up with 10. Okay. So from here, you're seeing it's below, but this one is between 5 and 15. So we have 1. This one is not. You have 2 here. Hope you can see. Maybe I can highlight them for purposes of learning. Okay, you have that. Then you have this. This. Then you have still this one. Okay, they are between 5M and 15. This one we already saw it's above 15, so it's not qualify. Then you have this. Okay. Then 17 doesn't qualify still. Then 4 can't qualify. Then you have 6. Okay, then you have this 6 as well. And then 27 doesn't qualify, it's above 15. Then you have this 5 here. Okay, then you have a 9 somewhere. So that's 9M, still it's above. Then you have this 6. And then this 8. Okay, when you count these, you'll find that here 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. They are 10. Okay, and that's how I end up having 10. When you add their amounts, the 9.1, 5.7, 8.2, and so on, you end up with the 71.2 million. So the smaller ones, of course, carry the balance. You don't have to compute this one or count. You just know, since these are 13, what is remaining to make 40 must be 27. And also for the amounts, you know that when you add these amounts together, if you may add these together, I don't have calculator here, but someone can help us add. When you add these ones together, the 88 plus 71, and deduct it from the 207, you end up with the 47. Okay, so those are the clusters. Okay, continue. Now, after coming up with the clusters, we are interested in the sampling unit. Sampling unit. Now, in this case, we are going to look at the trade